Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 22nd of October, 2021. Alright everyone, let's get into it. So, funny little kind of meme here about something called WorldCoin, which I'm sure a lot of you have kind of like heard about over the last few days. A new kind of like cryptocurrency that's aiming to, I guess, like maybe using the term solve wealth inequality isn't the right one, but they're aiming to kind of like rectify wealth inequality, or at least fix it or make it better by issuing this new cryptocurrency called WorldCoin and distributing it to the world's population. And the way they're going to be doing kind of like Sybil resistance here in terms of being able to kind of like weed out any bots or anyone trying to game the system is that they've got this thing called the orb that scans people's kind of like eyeballs, right? And puts like a unique hash of their iris on chain. And that's kind of like your proof of humanity or proof of identity sort of thing. Now, there was a bit of discussion about this in the Discord channel today. I'm not really a fan of this project. I think around 20% of the kind of like coin supply is going to insiders and team. So already it just seems very kind of like very insider kind of like team heavy for something that is trying to, I guess, combat wealth inequality. And also kind of like the eyeball scanning is kind of dystopian when you think about it, right? Putting that on chain. I know it's just the hash of it, but again, like none of this is open source or anything like that, so we don't know what it kind of is yet. But what I found really interesting about this project is the fact that it's actually building as an optimistic rollup on top of Ethereum. So it's not its kind of like own chain or anything like that. And as I said to you guys, I don't expect people to start creating their own layer ones from here on out, because it just makes much more sense to create your own layer two. And there's a bit more details about this here. Remco tweeted out about how Hubble, which is, I guess, like what they're calling their L2, their optimistic rollup, it seems to be considerably cheaper than all the existing kind of, I guess, like rollup solutions out there, both ZK and optimistic rollup. So you can see here, Remco says numbers from back when L1 ERC20 token transfers were $10. Hubble L1 verification costs can probably be gas golfed down quite a bit. So you can see here that Ethereum, if it costs you $10 to transfer a token on Ethereum, on Arbitrum it's $1.90, on Optimism it's 97 cents. ZK Sync 31 cents, Loopring 20 cents, Hermes 25 cents, and Hubble claims to do it with 6 cents. Now, I'm not aware of Hubble being live on mainnet yet, and it's not open source either. So until I see kind of like a production style system here, I'm going to take these numbers with a grain of salt. But still, I mean, if these are actually true numbers, then that's amazing. Like, as I said, like I'm not a fan of the WorldCoin project itself, but the tech that they produce can still be really, really awesome. Like if they can actually get the cost of an optimistic rollup down this much, it's quite incredible. And, Tuba followed up here and asked, why is Hubble so much cheaper than Optimism and Arbitrum? And Remco goes on to say, ERC20 call data plus EVM signature is a lot of data to store on L1. Hubble uses BLS signature aggregation plus compressed transactions to save on call data. Polygon is, of course, in here. And they go on to say, this is where I expect transfers for most optimized rollups to land. My question, though, is your Hubble fork already fully optimized with 6 cent fees, or is this a projection once the work is done? I get why using your own wallet will help with BLS signature aggregation. So he didn't answer this yet. Remco didn't answer this yet. But still, I mean, if this is possible, it's amazing. Like, this is actually going to bring even further improvements to, I guess, the rollup world here. Not just optimistic, but also ZK. And I think this is already on the roadmap for a lot of these rollups anyway. Because as I've said before, the iterations that we have today of both the optimistic and the ZK stuff is really just like the first version of what's possible there. It is definitely not the final state. I know it's still expensive today, but it'll get cheaper over time, especially as the costs become amortized across different transactions, and the cost gets shared on these rollups as well. So yeah, it's cool to see this. It's just cool to see someone else, I guess, like building a roll-up on Ethereum and basically validating my thesis around the fact that I've said multiple times now in the past that I just do not see people spinning up L1s anymore. It doesn't make any sense compared to spinning up your own L2, and this is probably the first of many. But yeah, I guess like on that note, I wouldn't say, like, I know I said I'm not a fan of the WorldCoin project. I'm just not a fan of the way they're doing a lot of different things. It really kind of just gives me a bad vibe right now. But who knows? It may turn into something better as time goes on. Like, it's very early days for the project. We'll see how it all pans out. But right now, the only thing I'm really a fan of is the fact that they're using an optimistic rollup on top of Ethereum. But even then, like, it's not open source. We don't know what it looks like just yet. We don't know kind of what trade-offs they've made, or any if they've made any trade-offs. We definitely want to see that kind of open source so everyone can kind of pull it apart and look at it, but still good to see that it's building on Ethereum there. If you do want to kind of learn more about WorldCoin, you can just go to their Twitter page here, WorldCoin. I'm sure they've got a website, worldcoin.org, and see what they're all about. But I mean, as I said, my opinion is that I'm not a fan. I'm just going to wait and see, wait and kind of like see how this pans out. What other people kind of think of it. I think, the funny thing is, it seems like Twitter's a bit split on it. Like, there's, I mean, I don't even know if it's half and half, but there's people like that are big fans of it. They think it's a great project. They think that it can actually work to solve kind of like the Sybil resistant problem. And then there's other ones out there who think it's really dystopian. It doesn't really make much sense. Why do we need another cryptocurrency for this sort of stuff? And I get it. But, for me, crypto was never really about solving wealth inequality. Maybe some people thought it was. I don't think it can. Like, I really think that wealth inequality is much more complex than anything that we can do within crypto. It's just such a broad problem. It doesn't just kind of like pertain to something like a distribution of a coin, for example. It pertains to so many real life related things that are completely outside of the scope of what crypto can do. For me, crypto has always been about just making a fairer system. Basically collapsing the costs of interacting with that system, making it so that everyone in the world can interact with it on equal footing. It was never about solving wealth inequality because, just to give you a prime example here of something where the rich, in a capitalist system, the rich get richer. Because the more money you have, the more money you can make, right? Or the more money you can risk without having, on something. And even if you lose that, it's not a big loss to you. For example, if you have like 10 grand and you want to risk like $1,000 of it, like just 10% of it on an investment, and then you're okay, you're okay with losing that. You've just lost 10% of your kind of like money, but you're okay because it was only 10%. It's all good, but that's still $1,000. Now, imagine if you're someone who only has $100 of disposable income, and you that's part of your savings, and you're like, okay, well, now I've only got $10 to invest, sort of thing. So obviously, the person with the $1,000 can compound their wealth. If they make it 2 times, they'll make another $1,000. If you make it if that person with the $10 makes it 2 times, they'll make $20. And then you have to go into the complexities of like investing itself and kind of like the different jobs people work and where they're born, like the geographic location, the opportunities there. It's just such a much broader problem than crypto. And that's another problem I have with WorldCoin is that I don't think you can just like fairly distribute a token, or at least like come up with the most fair way to distribute a token to everyone as kind of like some universal basic income thing and then expect everything to be okay. Maybe they haven't said that. I don't think they've actually said that, where they've basically gone and said, well, we expect everything to be fine and we're going to solve kind of like all the wealth inequality problems in the world. I don't think they've said that, but at the same time, I just, if this is some sort of UBI thing, then fair enough. Like you're pretty much just giving away money to people subsidized by others, because the only reason why the token would be worth anything is because people are willing to pay for it. Now, I'm not sure why they would be willing to do that. I'm not sure if that's even public yet, or maybe I just haven't looked too deeply into it. But at the same time, I guess like it would be a wealth distribution more than I guess like a new wealth creation, because essentially the wealth would be coming from people who are buying or bidding up this WorldCoin and bidding it up to, let's say it reaches like $1 billion market cap or whatever. That would be coming from other people wanting to buy it. Now, why would they want to buy it? Maybe speculation, maybe some other kind of stuff going on there. Maybe it's something that people want to use or whatever. I don't know why they would want to use it, but maybe it is. And it just goes, it gets pretty complicated from there as well. And it's like, okay, well, where's the value coming from? It doesn't just get created out of thin air. It's actually coming from somewhere. Okay, like, is this wealth, this is kind of like some wealth redistribution happening here, but how concentrated does it get? Because a lot of the cryptos out there right now have a really, really horrible Gini coefficient, even Bitcoin and Ethereum, compared to nations, that exist in the kind of like real world, and fiat currencies and stuff like that. But at the same time, like, it's hard to get an accurate picture because of exchange balances and people just putting, especially exchange balances, but also things like people putting their funds into like DeFi, into that contract, into staking. It's like all pulled together and stuff like that. So it's hard to get a picture there. But still, the Gini coefficients of the Gini coefficient, for those who don't know, is a way of measuring kind of like the distribution of a currency, essentially, or of an asset, I guess, like if you want to kind of like use that terminology there. I'm just not sure. So it's a bigger problem, I think, than crypto can solve. Like wealth inequality, definitely not something that we're going to be able to solve. But I think I like seeing the UBI experiments play out and seeing where they all land. You may have a different opinion. You can jump in the Discord channel. We were discussing it in there earlier today, but I'm happy to keep discussing it. It's definitely an interesting thing to think about. All right, so Immunefi made a huge announcement today that they have, and this is pretty pertinent and great timing actually. But they announced that Gerard here found a bug in Polygon's plasma bridge that could have resulted in an $850 million loss if exploited. So the bounty that was paid out is the largest ever at $2 million. So this person made $2 million for discovering this bug. So any people out there that are budding kind of, I guess, like code reviewers or security auditors or whatever, it's a very lucrative job, right? You can find these bugs and get like a nice payout. And this is all totally legal. Like some people might say, oh, well, they could have just like exploited the bug as a black hat and gotten $850 million instead. Well, I mean, there's a very small chance you'd be able to actually get away with that. And you wouldn't even be able to cash it out. It'd be very, very hard to. So taking the $2 million just from a kind of like incentive standpoint is the better kind of play here. But also from like an ethical standpoint, it's obviously a lot better as well. But the reason why I think this is timely and pertinent to discussions that I've been having on the Refuel lately with you guys is around bridges. And I've warned you guys how these bridges, they hold a lot of value in them and they're not foolproof. They're not going to be bug-free. There are going to be bugs. There are going to be centralized points of failure. There is going to be exploits that happen. And you really, really need to understand the risk that you're taking when you put your funds into a bridge. Because as I've said before, the bridge isn't literally a bridge. It's basically just gives you an IOU. And your real assets still live on Ethereum. Like when you bridge over to a lot of these chains from Ethereum, your actual assets are only secured by that contract on Ethereum. If those assets get exploited on Ethereum, then your assets on the chain that you bridge to pretty much are worthless, unless there's some kind of like centralization in there that allows them to like reissue the tokens such as USDC or USDT or something like that. But say it's your ETH. I mean, you ain't getting that ETH back. If they're lost on, for whatever reason, on the chain that you bridge to, then you have no way of unlocking your tokens on Ethereum, unless that smart contract, unless the bridge contract on Ethereum has a centralized control, and that centralized control is used to, I guess, unlock the funds. But just generally, you just really don't have any way to kind of like bring it to bring it back there. So yeah, bridges, a lot of bridges out there these days. I don't expect everyone to know, I guess, like every bridge out there and the trade-offs that they take and everything like that. But I do want to just like make sure that people are aware that these risks are out there and to essentially be wary of them, and don't be surprised if this keeps happening. I definitely think that the largest hack that we'll ever see will have to do with something with a bridge. I think it already did with I think it was the Poly Network. It had nothing to do with Polygon, but it was called Poly Network, and that was like a bridging kind of thing there. I think that that was what, $800 million or something. I think the funds were returned. I think it was $600 million actually, and that was actually exploited. But I think that we're going to see multi-billion-dollar exploits happen in the future, and we may get to a point where they don't actually get returned, right? And these funds just are gone forever for whatever reason, and it's just not a good time for people kind of bridging across. Now, you may be wondering, well, what about layer 2s? What about the bridges there? As I've said before, the layer 2s are also in the same kind of bucket because there's two types of bridges into layer 2s. I guess like there's more than two types because there's like subcategories. But in the way I think about it is that there's the official bridge, right? Where you go from like layer 1 Ethereum to the layer 2 through the Arbitrum bridge or the Optimism bridge. And then there is the other bridges like Connext or Hot Protocol and things like that are essentially cross-chain exchanges. They're not actually like the bridge contract that you would normally use. Now, they're a lot riskier, I would say, than using the official kind of like bridges. And at the same time, there's other risks involved as well with kind of like how those assets are backed up and how those assets are, how those bridges are kind of like designed too. So the L2s, I mean, I always use the official bridge, but for depositing. But I guess for withdrawing, you don't want want to wait 7 days. So you use one of these other bridges, but they definitely hold more risk, and you're definitely taking on more risk by doing that. But in the normal case, you probably aren't going to worry about it, probably not going to notice anything. But there will come a day where there's like a reckoning here, and I just want you guys to be aware of that so you're not caught off guard by it. But I think a lot of people will be, unfortunately. I just think it's inevitable because there's so much value at stake here, and I think a lot of teams are playing hard and loose with bridging protocols because they're just trying to meet the demand, because there's a lot of demand for this right now, and they may be thinking of security as secondary. Not to say that that's what Polygon did here, but you know, there are going to be bugs no matter what. So just good to keep in mind there, I think. All right, so speaking of Polygon, Amun here announced that they have launched a Polygon Ecosystem Index called PECO or PECO, a single token that captures the best native projects on Polygon. So it's available now at amun.com. Hopefully I'm saying that right, and SushiSwap. So what the, I guess, index consists of, if I go down here, the index composition, you can see here it's 50% Matic, 26.1% Quick, and then a bunch of others in there such as Aave Gotcha, Ghosts, Adamant, Defin, yeah, and QI DAO. So if you want to go along, I guess, the Polygon native ecosystem, this is probably something of interest to you. You know, I'm pretty sure they kind of, yeah, they have their methodology here as well, and like what kind of the requirements are, and kind of like a simple how to buy as well. I mean, you know, you could just literally go and buy it on SushiSwap on Polygon, I believe. I think they've got a breakdown here, and you can like mint it as well and things like that as well. And they've got links to the pairs. So yeah, I mean, this is cool to see that there's a kind of like index product that allows you to capture some of the stuff going on in the Polygon ecosystem. And you know, this is funny because like there's the Index Corp, which I talk about a lot, that does index products, but this just seems to be a standalone index product. So I guess a little bit of competition there maybe for the Index Corp. They're not on Polygon though. They're just on Ethereum. So maybe this will incentivize them to move over. But yeah, cool to see this from Amun here. So Immutable has announced that they are doing a supply split of the IMX token before it launches. So they've done a 100 times increase in the total supply from 20 million to 2 billion. And if you had one token, for example, you'll now receive 100 instead. Now, this is just a shift in the token supply amount. This is not this does not mean that you automatically have 100 times more worth to your token. It just means that the token supply has been readjusted. Now, you know, I just a disclosure here, I'm an investor in Immutable, but I think I can be honest here in saying that whenever I see a team do this, or whenever I see a project do this, I think it's because, I mean, they did say that they want to make the network more accessible here to bring the masses to the metaverse. I think by increasing the token supply to something, you know, really high, like 2 billion, it does two things. One, it makes it so that your token has a really low unit price. So, you know, we all know that the lower unit price tokens within crypto do better, you know, mostly do better price-wise, because newer investors to the ecosystem don't understand market cap and things like that. They just see like a cheap token and like, oh my god, I can buy like so many of these tokens, and you know, if they go to this price, then they're worth this much, blah, blah, blah. So that's one aspect to it, and that's obviously a big aspect. But secondly, I actually do think that it's better to have it like have it so that people can feel like they have a lot more like a lot of tokens, so they don't have to kind of have like 0.001 of a token, even though it's worth like $10,000, for example. They have to have like 0.001 of it, something like Bitcoin today. I know Bitcoin has like sats, and they're trying to denominate in that. But I think doing it on the core protocol side, or I guess like the core token side from the get-go, is probably the best way of doing it. So now, instead of users being like, oh, you know, if the IMX price at a 20 million supply, say the IMX market cap was 1 billion and you had a 20 million supply, while the price would be what, if I'm doing my math correctly, it would be $50, right, for one token. Now, times that by 100, the same market cap would be 50 cents instead of kind of like instead of $50 there with this new token supply. So you can see how people will be able to buy 100 times more, or feel like they have 100 times more tokens than what they really have. So yeah, just giving a heads up to people who are able to participate in the IMX sale or have an airdrop coming. Don't be surprised when you have a lot more tokens, but also keep in mind that those tokens, it's not like you got extra money. It's just that you got like you got redenominated essentially. All right, so Lucas Shaw here from Gnosis put out a tweet saying that the GnosisSafe is the first smart contract used to secure $100 billion in digital assets. So for those of you who don't know, a GnosisSafe is a multi-sig wallet that pretty much everyone uses. I have a bunch of different GnosisSafe wallets that I use on there. It is probably the safest multi-sig on Ethereum, and that's why everyone uses it. Obviously, it's a winner-takes-most market when it comes to these things, because if you're using a multi-sig smart contract, you want it to be safe, you want it to be bulletproof, you want it to be have been in the market for quite a while, you want it to have all those nice features. So $100 billion is huge. I mean, this is ETH and ERC20 tokens, but that's absolutely massive. And someone put a tweet out saying, what if Gnosis starts taking like a fee on this? Because it's currently free to be on there, but they could do like a really, really small fee, like 10 bips or something like that, like a 0.1% annual fee on this, and $100 billion, you do 0.1% of $100 billion. If I'm doing my math correctly, that's $100 million a year, right? So $100 million a year for just storing assets, and this is going to keep growing over time, but $100 million a year, that's for literally just having like a contract out there that essentially holds these assets and keeps everyone's assets safe. And, this could grow to $1 trillion in assets, rather soon. That would be $1 billion of revenue a year for Gnosis. So, yeah, I don't know if they will do that. I feel like putting a fee on it may get people kind of like withdrawing their assets out of there. I personally wouldn't. Think about it. 0.1% fee is basically nothing at the end of the day, like a yearly fee. I just really don't think it's a big deal. And I think most people would pay for it for the fact that they actually get to secure their assets in this battle kind of like hard and smart contract. So we'll have to see how it pans out there. I think, Gnosis has a lot of different products. They have GnosisSafe. They have the Gnosis kind of like prediction market platform. They have CowSwap. And, they have a bunch of different things going on. I think CowSwap might be spinning out of Gnosis though, but they've been like a builder within the Ethereum ecosystem for quite a while now. So it's great to see them having success with things like GnosisSafe, which has incredible product market fit. I mean, multi-sig wallets are like the lifeblood of a lot of this industry, not just for protocols, but also for groups of people and individuals who want to have a multi-sig, like even if it's just a 3 or 5 or something like that, it's definitely needed. So yeah, great to see them having success here. So Danny Ryan put out a tweet saying that looks like 62% of nodes have upgraded for Altair, and this does not reflect one-to-one on stake weight that is upgraded. We'll not know that until the upgrade itself. There's still 6 days to go, so if you haven't updated yet, be sure to do so. Altair, just a quick reminder, is the ETH2 network upgrade that's coming on October 27th. If you're a solo staker, definitely make sure to upgrade your nodes so that you're not left on a minority chain and you don't kind of like suffer any kind of inactivity penalties on your stake or anything like that. But yeah, I mean, 62% so far is really great. It's funny because usually people wait till like the last minute to do it, and then some people get left behind. Like usually, and we've seen this happen on ETH1 a lot of times before, and then people quickly update as they realize that they're on the wrong chain. And I think people will actually be either quicker to update or will get like a much higher percentage just before the upgrade goes live with ETH2, because you stand to lose your stake if you don't update. With an Ethereum full node, if you don't update, then if you're a miner and you were mining on the wrong chain, well, you've just got some opportunity costs there. You may have paid a little bit in electricity to mine the wrong chain, but it's not like a huge deal. With ETH2, I mean, you are leaking out from inactivity, but I'm not sure if this is true, but I feel like there is a risk of getting slashed as well. But I have to double check on that. But yeah, I mean, it's just good to upgrade anyway. So definitely go upgrade if you are running nodes here. So Optimism have announced that they're delaying their mainnet launch of the EVM equivalence upgrade by 2 weeks to November 11th, 10 a.m. PST. So they say here they are on track to deploy their mainnet staging environment tomorrow. After discussing with partners, we're extending its trial period to ensure a smooth transition. And just some more details about that here. So essentially what's happening is that it is going live on mainnet staging tomorrow, which is, I guess, tomorrow? Yeah, tomorrow. But like the mainnet for Optimism for OVM 2.0 is being delayed to November 11th here. Look, as I've said before, I'm all for things getting delayed if it's for like, I guess, security reasons and network health reasons and making sure everything goes smoothly. But at the same time, The first thing I thought here, even though I love Optimism, the first thing I thought here was like, ugh, another Optimism delay, right? Because unfortunately, Optimism has been like have been suffering from this for quite a while. I mean, there was the infamous delay in March where they basically said that they would be going live in March, and then they kind of like delayed themselves and went live in kind of like July with Uniswap, and have been adding protocols over time. And they've had this massive upgrade going live for, it was supposed to go live on October 28th. Now it's been delayed by 2 weeks to November 11th. But I'm sure they have the good reason to do this. And obviously, I'm still kind of like bullish on Optimism and all that they're building here. But, I that was the first kind of like thing I thought, unfortunately. Still love you guys, right? Still love everything you're doing, but unfortunately that was what came to mind. But yeah, I guess like once this is done, again, I'm expecting the whitelist to be removed on Optimism's network. I really want to see them catch up to Arbitrum, because as much as I love Arbitrum and I'm an investor in Arbitrum, I am a firm believer in competition being the best kind of like a best thing for this ecosystem, especially amongst the L2s. We can't have just one L2 dominating. We need everyone to be competing with each other to keep, improving over time. Because the L2s are not only competing with each other for market share, they're also competing with the other L1s, and they actually play a huge role in kind of like keeping everyone on Ethereum and keeping Ethereum's dominance kind of like in play. And I really think that competition at the L2 space will just kind of keep that chugging along. So I'm wishing for the success of all these different L2s out there. So yeah, I mean, I'll keep you guys updated on Optimism's kind of regenesis thing here and there. OVM 2.0 upgrade as well. So Obol Network announced today that their Genesis community, along with their guiding mission, vision, and values on their path to securing the decentralization of proof-of-stake Ethereum. So you can see here that their Genesis, community consists of advisors. So the advisors that they have on board are a bunch of different people within the Ethereum ecosystem. You can see here they all work, in Ethereum in some capacity. There's a few ETH2 core developers in there, and researchers and things like that. There's a few people from other kind of like places, like Jack here from Scale Network. I'm just scrolling over random names here. People from like staking companies and staking service providers like Chorus One and stuff like that. And then they go on to explain their mission, which is to use and evolve the SSV shared secret validator building block by creating a crypto economic protocol and diverse community that can enable the primitive to become a sustainable public good, increasing the security and resiliency of blockchain networks. So you can see here, I mentioned the other day that the current ETH2 architecture lends itself to an active passive redundancy single operator, which basically means that you can have one key online, one validator offline, and then you have like a validator with a being offline as like your backup. But that has to be offline to be your backup, or otherwise you suffer from things like double signing. Whereas with Obol in their ETH2 architecture, you can have active redundancy as a multi-operator. So you can have validator clients in multiple places, talking to an Obol node, but you can have them all online at the same time. So if something happens, the other ones will kind of like keep going, keep validating for you. So you never miss kind of like attesting to a block. You never miss proposing a block, which is obviously huge, especially for enterprises that want to get involved with staking and want to run their own kind of like setup as well. So and then they go on about their vision. They believe in a more robust and secure Ethereum, and kind of like how the kind of like cluster works, and kind of like you can see here that they've got like Obol clusters with different nodes running. So like client diversity, something that I've been talking about a lot lately. You can see on the left here they have different ETH1, different ETH2 client running, or consensus layer, and should I say execution layer running, and then in each kind of like cluster they have different ones running, in different kind of like staking service providers running as well. So this is really cool, and Obol kind of like sits in as kind of like the bedrock there, as kind of like the middleware there. So if you want to learn more about them, definitely check out this thread. They've got like a great explanation here of everything that they're doing, and I mean they have a killer advisor, public advisor kind of like set up here with these people. I mean they're on the forefront of staking both on Ethereum and other networks out there. So this is really, really bullish for Obol, I think. And disclosure, I'm an investor in Obol, but that's because, I mean, big fan of proof of stake, big fan of Ethereum. It was just like, it made a lot of sense for me. But I think on that note, I'm going to end it there for today. So yeah, thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give the video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all next week. See you everyone.